Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly discussion of current market conditions, what to expect short-term, what to expect long-term, and we'll go over the recent trades. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. This is my brief bio. I was Executive Vice President, Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 15 years. Mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures are very important. Please read them. We will go over specific trading examples, so it's important to know the disclosures. Trading stock and options involve risk and not suitable for everyone. You must be aware of the risks and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. And you can see the relationship between Tradespoon and trading block on the bottom of your screen. All right, let's talk about first, let's take a look at the market. So looking at the stock forecast toolbox, for the next 10 days, we still have a bullish momentum for the next 10 days, potentially retesting the 433 level. Support is at 426. We are trading 1% below the predicted low, so we do have a reversal today. We have an expiration Friday, right? August options expire. We're trading at 422.92. And again, one day doesn't set the trend. So for now, bulls are in control. I would say as long as we are trading above 418, 420 level, bulls are still in control. Short term. So still positive trend, potentially retesting the recent highs around 430 level. If you look at the 6 months prediction, right? If you look at the 6 months prediction, overhead resistance is at 411, support at 353. Same model, but each data point is 1 month. So instead of analyzing, current year, we're analyzing past 25 years to make long-term prediction. So based on the long-term prediction, market is overbought, and the model doesn't see a market going as higher than 411. We are obviously at 430. We're 5% above the predicted high. We were 5% below predicted low, but all it means is it probably doesn't make sense to chase the rally at these levels, right? That the market is extremely overbought. Can it continue going higher? Absolutely, right? I was looking at next main events, and probably next week we have manufacturing PMI that can spark some of the volatility, durable goods order, and then we have inflation data, PCE data. So Wednesday and Friday we can continue to have sparks in volatility, right? Especially on inflation data. If it's again like CPI data and PPI better than expected, I think we'll have a muted reaction. But if it's worse than expected, right, then the market will pull back, right? So right now, market is in mode where good news and the market incrementally can continue going higher, right? 430, maybe 435. Any bad news, and you're going to have big pullbacks. So from that perspective, again, risk versus reward doesn't make sense. We are trading in the range, right? You can see in the past 3, 6, 7 sessions, we haven't really gone anywhere. We're still trading above the CPI level. This is the breakout, the 420 level, right? 420, around 417 level. So as long as we're above 417, bulls are in control, right? And we can continue to trade in this range, right? So let's clear that out. All right, so this is the high, this is the breakout, right? These are, so market is trading in this range, right? So as a trader going into October, September, October, right? You have to kind of decide what's going to happen going into October, right? There are two things can happen. Market, there could be a good news, PC data better than expected, right? Or CPI data in September when everybody goes back from vacation, maybe CPI data continues to get better and Fed will come out and say, we're going to pivot, right? We're not going to raise as aggressive. Instead of maybe 75 basis points that they thought last meeting, maybe they're only going to raise 50 basis points, and maybe they're going to say we're going to raise another 50 basis points in October, and then we're going to pause and see what happens, right? And then the market will rally, right? Market will continue to rally, right? And this idea of soft landing and low unemployment numbers and better than expected earnings continue to expand, and then October we're trading at 450, 460. I don't know. Next level is around 450, I would say. So we're trading 20 points to the upside, right? So by end of September, 20 points to the upside, maybe another 5%. Or, PC data is worse than expected, CPI data is worse than expected, we're still far from 2% target, and Fed is not pivoting. They basically continue to raise, 75 basis points in September, maybe 50 basis in October, and they're still hawkish tone. And then the market pulls back, right? I don't know, we're trading 420, 400, right? Minus 20 points. So those are the only two possible scenarios, right? We're probably not going to trade here for too long, right? Maybe a couple of weeks like we did here. When we were building the bottom, it took a little longer, right? It took like almost a month to build the bottom. Maybe it'll take 2 months to build the top. We'll see. Sorry, months, 1 month. It's around, I don't know. Yeah, around 1 month, maybe 5-6 weeks, and maybe it will take 5-6 weeks to build the top. So scenario number one, we're at 450 by end of September, and scenario number two, we are at 400 by end of September. Right, so that's probably the most important question right now, right? And this is probably soft landing 450, and this is hard landing too. So very important questions that will help you to build the portfolio and decide, with how many bullish positions, how many bearish positions you should have. And let's go through some of these answers. So how many of you think one will happen by October, right? By October, we're gonna be at 450 or close to 450. It doesn't have to be exact 450, it could be 455, 445. Or we're going to be at 400. Same thing. We could be at 390. We could be at 405. But Mark 2. All right. Mark, is this Mark from Rogers Park, or is this another Mark? Trader 2. All right. Anyone else? 2 or 1? Sorry, Park Ridge, Mark. Park Ridge. All right. Welcome, Mark. How are you? Two. All right. Anyone else? Everybody's saying 2 today? Nobody, no one, so that's kind of weird. Maybe because it's a down day, right? So I'm gonna go with Stu too, right? I'm gonna go with Stu. So that's the first question, right? That's question number one, right? All right, so we say October, we're, second scenario. Okay, second question is, where are we by November, right? November. November is a lot more time, right? By November 1st, more, are we at 380, right? Or, maybe 380, maybe 380, right? Scenario number two. So sorry, here, two. Or are we at 460? Right? The more time, the more magnitude of the move, right? So are we at 460? Right, or are we at 380? So 460 would be, plus 40 points. Are we up 40 points, maybe 10% up in the market, or are we down 10% and we are at 380, right? Minus 40 points. How many of you say one by, end of October, going into the midterm elections, right? By midterm elections, as we're approaching midterm elections, are we going to be up 40 points or are we going to be down 40 points? And this is, you're going to have a lot more data, right? You're going to have multiple CPI prints, multiple Fed meetings. Mark closer to one. Okay, interesting. All right, trader two. Anyone else? Done, up. By November, right? End of October, going into midterm elections. Okay, here we have mixture. Okay, so probably 50-50. Half of the people said one, half of the people said two. All right, so by November 1, right? This is October 1. By November 1, I'm actually going to say two. My answer is two. I don't think we're going to be at 460 or 50. I think this rally will fade going into midterm elections, and we'll probably get closer to 390 or 380. I don't think we're going to break the lows. I think that's the worst case scenario. We're going to retest the lows, right? 360, 370, but realistically, maybe 50% of this rally will give up, right? So from 430, 360, I don't know, 40, 70 points, about 35, 40 points, that would take us to 390 level, right? Realistically, that's my core scenario. We're going to reach this level, 390. That's a good support for the market. So, okay, that's good. And then the third question, right? The third, probably most important questions, June, whatever that was, 15, right? June 15. Was this the bottom, right? Maybe we might or might not retest it, September, October, but is this the bottom? And I guess we can do it as two questions. Bottom in 2022, and then same question we're gonna pose is, well, first 2022. So it's just June 15 the bottom for the year of 2022. Let's do yes or no. All right. Well, yeah, if you said one, then you'll say yes. And if you said, well, if you said two, may not. So is this the bottom for this year? All right, Mark, yes. Thank you, Mark. Anyone else? markets can change quickly. I don't know. Okay. A lot of people say don't know. I'm going to say yes. This is the bottom for 2022. And then and the fourth question, the final question, is the June 15th. Was June 15th the bottom? For 2023. And we'll review this video, in a couple months. So 2022, I'm going to put down yes, right? I think this is the bottom for this year. There's just not enough time. I mean, you're right. You don't know, right? Nobody knows, right? Nobody can say this for the fact, but you have to have an opinion, right? So trading is about opinion, and based on your opinion, based on the information, based on the research, and how much money are you willing to invest based on your opinion, right? If you think this is the bottom, then you can be a little bit more bullish, even if we revisit these levels, right? And you trade in some kind of a range strategies, but you know what your reference point is, and then you can be a little bit more bullish. If you said no in 3, right? Kevin said we're going to be at 350, then you have to be more bearish, right? Because if we're going to revisit 350 this year, well, and we're at 430, then there's really no room to the upside, and it's all to the downside, right? So your portfolio composition should change based on the answer to these questions, right? Which bullish or bearish positions you will take. All right, so 2023, yes, no, done. Was this the bottom? All right, still bunching out, what did therefore be? Yes. All right. Most of you said yes. I'm going to say no. Okay. My answer is no. So I think we have reached the bottom this year. We're probably not going to revisit it this year, but the next year, we will revisit the bottom and most likely break it by big margin, like 300, 320. So obviously that should set the tone in terms of what type of signals we're going to generate, and which bullish or bearish signals I will take based on those answers. So if you said 2 yes and no, this is the hard landing, right? This is the idea of hard landing, that the Fed will not pivot, and it's going to continue raising rates until it reaches 2% target rate, or whatever the new target rate is. And it will cause a recession, right? Not this year. Earnings are better than expected, so we still didn't feel the effects. But starting, fourth quarter of this year and the first quarter of next year, the margins will continue to contract. Wage pressures continue to stay high. Rents are going to be high, and housing market is not going to recover anytime soon. So that's hard landing, right? If you said that this is the bottom 2022, 2023, then you believe in a soft landing, that the Fed will pivot, which might or might not happen. Nobody knows for sure, right? And the market continues to rally. So based on these answers, if you're either in a hard landing or soft landing scenario, and you have to build your portfolio accordingly, right? You have to build your portfolio accordingly. Short term to support. So, I mean, we don't need to worry about, you do have to worry about, right? The first rule is cash, right? So based on your answers, you have to kind of decide how much cash you're going to have, right? That's the first very important question. Based on these answers, if you believe in hard landing, I propose to have 50% of your portfolio in cash on average, right? Depending on your risk tolerance. Right? If you believe that we are in hard landing and Fed will not pivot in the next few months. If you believe in soft landing, I propose, yes, you should, based on your opinion, start utilizing more cash, and maybe cash should be 30% of your portfolio, right? If you believe, in a soft landing, right? So these are important decisions to make, right? How aggressive you want to be in the current market, right? Some of the observations, 10-year yield, we do have a little bit of yield steepening, right? The delta between 2-year and 10-year is 30 basis points, right? 30 basis points. It was as high as 40 basis. It's fluctuating between 40 and 30. So it's still inverted, but a little bit steeper. Again, because of the inflation in Britain, worse than expected, in Europe, worse than expected, so yield continued to rise. Dollar continued to rally, right? It's revisiting the 20-year high. So this is a bearish for the market, right? We talked about that the dollar continues to rally. If it breaks this level, then the sell-off will accelerate. One of the reasons the market is down is because dollar just moved, 3%. And that's not good for, global economy. It's not good for the global companies, S&P 500 companies. So stronger dollar. That's the reason why I think, in the next months or two, we're going to have, pullback is going to continue. So stronger dollar is something I would watch, right? If the dollar breaks through this overhead resistance, the sell-off will accelerate, right? And that's where we're gonna get to, 380, 370 level, right? And so I would watch this level. We're approaching important overhead resistance. I would also watch high yield, right? High yield, one day doesn't set the trend, right? In terms of some of the rules, we talked about cash. We talked about rules. One day doesn't set the trend, right? But 2-3 days does, right? Spiders is down one day. It can reverse by end of the day and be positive, or next week it will bounce off of this 418 gap. But in high yield, right, which is a proxy for risk taking, we already took out CPI data, right? CPI data was in August, market rally, high yield rallied, but now it's pulling back. And high yield is a proxy for risk taking. You can see kind of the same price action in ARK Innovation. We're on the way to retest the lows. We'll probably break the lows this year, right, in ARK Innovation, because we're already posting August lows, right? So, and it's not one day, it's 4 days. So most likely at this point, I don't think ARK will break out above 55 level anytime soon, right? Maybe November, December, but not anytime soon. And same price action in Bitcoin, right? Bitcoin also dropped this. So high yield, Bitcoin, and ARK Innovation are a proxy for risk taking, right? How much, or Bed Bath & Beyond, meme stocks, right? Stocks is going higher, right? Because people are willing to take risk, and now it reverts back because now people are not willing to take the risk. And usually QQQ and spiders will follow, right? Again, one day doesn't set the trend, but we have day one, 4 days not making lows, and and we're sitting at the key support level. We're actually trading below or at the level pre-CPI data announcement, right? Which is probably bearish. So these are my reasons why I think, can we revisit 200-day moving average on QQQ 341 or 333? Maybe, right? Maybe we can revisit them, but the likelihood that we're going to break above 200-day moving average or above this 50% retracement is probably very low at this point. So that's my view for at least short-term, being cautious and not chase the rally, and potentially to add on to your bearish positions. So I encourage you to watch the high yield and ARK Innovation and Bitcoin. These are all proxies for risk taking. Russell 2000 also, right? Russell 2000 also, we have, day one, day two, day three, we're making new lows, right? We're sitting at the key support level. Again, the CPI data. I would watch before CPI print in August and after. If we are below the print, that means bears are in control. If we're above, then bulls are in control. And same thing with semiconductors, right? sitting at the key support level. Again, prior, trading right at the level where was the CPI print. All right. Any questions? So, Chuck, would it be a good time to sell a bear call spread on spiders? I think the weakest, you can see that spiders are outperforming the technology, right? Spiders already at 200-day moving average. They retested 200-day moving average. They retested downtrend from January, and they retested 62% retracement. QQQ has been underperforming, right? It's never touched 200-day moving average. It's below 50% retracement. So personally, if I have to choose between spiders and QQQ, I want to short QQQ, right? Because I think this is the weakest link, right? ARK Innovation, high yield, Bitcoin, meme stocks, that's the weakest link. That's what's gonna get sold off the most, right? Because these are weak hands, right? Institutions don't buy Bed Bath & Beyond. Bed Bath & Beyond, retail investors buy Bed Bath & Beyond. So they are the first one buying and they're the first one selling. And technology is the same thing. Everybody's piling into the same trades, right? Into QQQ, Amazon, Microsoft, Google. These are the trades from the past 10 years that worked well for everybody. Everybody's piling into them. And these are the first ones that will probably drop the most. So personally, I chose 330, 350 call spread. I have a put, 280 to 40 put, but I also have 330, 350 call spread. Because I don't think we're gonna break through the 330 level or 350 level. So those are the strikes I chose. I mean, I did it because I didn't think 310 level will be broken. If you choose now, maybe you can go a little bit higher, 340, 360, 346, 360 on QQQ, right? I went into November, December. I encourage you to do the same because you don't know when this pullback is going to occur. Is it going to occur? Is now when this pullback is going to start, or is the pullback going to start in September? You don't know, right? There are two scenarios. We're either going to hold this level or we will not, right? Right, so one scenario is, we kind of just continue to trading going into September and Labor Day weekend, right, where we're trading in the range. But the other scenario, we break, right? You just don't know. We can break next week on PCE data, or we can break, when people come back from vacation. You don't know. Or when we get the next CPI print. So for that reason, I would probably choose 350, 370 spread, right? And you want the credit to be 30% the width of the strike. That's usually the setup, right? You choose your strikes where your maximum profit is 30% and your maximum loss is 70%, right? So if you sell 350, 370 call spread and you can get, $7, $6 for that spread, I think this is a good trade because you basically said two, right? You basically said we're going to do two and we're not going to do one, right? So if you said two, this is a good call spread. Obviously, if you said one, then you do the opposite. You sell a put spread because you don't think we're going to revisit, 300 to 80 level. But I'm personally right now, if you look at Elite Circle, I'm at 330, 350 call spread. Thank you, Chuck. Thank you, Charles. Kevin, I do agree, yes. So I know VIX, I'm not maybe putting enough attention on VIX, correct, yes. So VIX is a good proxy for trading psychology, right? when VIX reaches 20 is a historical level. With all the issues we currently have, we were below 20 level this week, right? Consistently. So that to me indicates complacency, right? That's the new norm, right? In the bull market, 20 is actually a lot of fear and 10 is complacency, right? In the bull market. In the bull market, this is the range, right? In the bull market. But in the bear market, this is the range, right? So this is soft landing, right? So everything is relative. You can't just say, well, it's oversold and, you know, it reached April. Well, if you believe in soft landing, then we're going to do this, right? Market is going to continue going lower this year, right? The volatility. If you believe in hard landing, right, then this is the bear, you know, range, right? So I believe we are in hard landing for the reasons I outlined, right? And mainly it's Fed, right? You have to kind of guess or have an opinion what Fed will do, right? And technical trading, everything else is, I think, is irrelevant, right? I mean, you can see, technically, obviously, market is overbought and should pull back. But again, if CPI data is going to be, you know, better than expected, and in September, Fed will come out and say, listen, okay, fine, we'll raise in September by 50 basis points, but then we're going to pause because it looks like inflation is significantly down, right? Then we are in soft landing and market continues going higher, despite all the technical analysis. Despite 2 sigma, 3 sigma, 10 sigma moves, Fed will drive the market, right? So that's, in essence, the question, you know, of the day, or elephant in the room, is what Fed will do. But, you know, since we're trading, you have to have an opinion. So you have to figure out, are you in a hard landing camp or a soft landing camp? If you hear the news and most of the research I've read, majority of the professional traders and institutional traders are in hard landing. And that's where I am. A lot of retailer investors, they either don't know or they are, you know, they tend to gravitate to fear of missing out, right? So, you know, market has been rallying 2 months. For the past 2 months, why not for the next 2 months, right? So that's the reason. And I'm not sure if that's good or bad reason. So everything is relative right now. If you believe in hard landing, obviously, yes, a lot of complacency, VIX is low, and this could be a support. If you believe in soft landing, you will argue, well, historically, VIX is below 20 in the bull market, so it's going back to 10. So again, important indicator, I would watch it. You know, 2 people will interpret it in different ways, right? And I'm actually reading this new book by actually Russian author who's an immigrant too, and he's a quick, often contributor to CNBC. But you know, going back to Stoic philosophy, right? Going back to Stoic philosophy is an interesting observation. And there are 2 schools, right? One, well, Stoic philosophy, right? And there was what do you call them? Sophist. Sophist philosophy. Right. So there is a sophist philosophy, right? What was the difference between Stoic and sophist philosophy? That sophist philosophers are trying to persuade you to a certain opinion based on the emotions, right? They're pushing emotions. They're using words very carefully to push you in one way or the other, right? And that's what you hear on CNBC and Bloomberg. They're coming out to explain you what is happening in the market. So it makes sense what happened in the past. They're not trying to explain you what will happen in the future most of the time. They're trying to kind of provide you rationale what happened in the past. And they're using emotions and jokes and everything else. So he's basically saying, you do not want to be a sophist, right? You do not want to be a sophist when it comes to market and when it comes to listening to the news. You want to be a Stoic philosophy, And Stoic philosophy, started by Zeno of Citium, and Marcus Aurelius and Epictetus. Their idea is that not to get emotional. And when you hear somebody is giving you persuasion, right, you want to find people, and he's talking about actually four different ways to one is the scientific, right? There's a scientific way to give you information, right? Scientific. The second one is political, right? Political. The third one is what's the word he's using? Kind of a legal, right? Legal, like attorneys do, right? I forgot what's the fourth one. But the idea is that, political, people have agenda, right? The politicians, they may or may not believe in the truth, right? But they will tell you what the masses want to hear, right? If you want to get elected, you tell people what they want to hear, not necessarily what you believe, right? So you want to avoid, when you're a trader, you want to avoid, political point of view, right? Legal, attorneys, same thing. They want to persuade you into a certain outcome, right? They want you to, if they're on defense, they want to, say that you're not guilty, and if you're on offense, right, then you want to tell you that you are guilty. And it's not really, lawyers should be able to persuade you on both sides. They should both be able to, argue the, the defense or prosecution, right? So that's the legal, right? You also don't want that, because they are not looking for the truth. They are looking to persuade you one or the other. So when on CNBC and Bloomberg, you have different types of speakers, right? And the first step is to figure out how is the person argues? How does he provide you with explanation? Is he more of a politician? Is he more of a legal or scientific? Scientific is that you seek for truth, right? The idea is to find the truth, right? And you put your ego aside and you never assume that you are right, right? If I'm gonna, talk about bull market, if I'm bear, right? If I'm bear and I'm bearish, my goal is not to persuade you to be a bear, right? My point is to have an open-minded conversation, put the ego aside, and assume that I could be wrong. And if you can give me more rationale and more reasoning why I should be a bull, then I should be happy to change my opinion at any given point. If you give me more information to tilt the balances toward being a bull, so my point is that you always have to, wherever you get in your source of information, whether it comes from the CNBC, Bloomberg, other newsletters, or your professional institutional money managers, try to understand what are they trying, how are they approaching information? Are they seeking the absolute truth, or do they have some kind of a political or legal agenda and they're just trying to persuade you to be in a certain camp, right? So this is extremely important. So Kevin, thank you for that question. It's a little bit long question, but I like this discussion. And some of these things are obvious, but some of this, when you read the book, it's like, oh my God, it makes sense. All right, TLT. My opinion hasn't changed, right? So it's right now we're back to the same kind of paradigm we had in the beginning of the year, right? Where TLT is down and QQQ is down. And that's how we were throughout this year, except maybe here, right? So we had some divergences, right? The first 6 months up until June, TLT is down, right? And QQQ is down. That was the correlation. Then TLT was up. TLT is up and QQQ is up, right? So that's same correlation. Nothing has changed, right? Direct correlation. Right, this was correlation 1. This is correlation 1. Here, TLT is down, right? TLT is down, but QQQ was up. Right, TLT is down, but TLT is down, but QQQ is up. Right. So the question is next, right? I think, so it looks like at least for now, TLT is down and QQQ is down, right? And I think that might stay short term, right? And perhaps maybe throughout this year, this relationship might stay. I think this is the bottom and we will not break this bottom. Can we continue going lower? Maybe. But I still think the path of least resistance for TLT to go higher and at some point go back to the normal correlation, right? And the normal correlation, people either buy in treasuries because they're afraid and they're concerned and they're hedging, or they're buying technology, but they don't sell or buy at the same time, right? Right now we're back into inflation mode, right? People are concerned that inflation is worse than expected in, in Britain and Europe and in the United States, so yields are rising, right? Yields are rising and technology is selling off. At some point, when the rhetoric changes, instead of worrying about inflation, people are going to worry about recession, this correlation will break. It looks like that correlation will break probably next year, not this year. So at least this year, I think TLT is going to trade in tandem with QQQ. So it can continue to pull back, maybe September, even October, and then rally in November, December. And I think next year the correlation will be broken where TLT is going to continue going higher, but the technology is going to continue going lower. And that's hard landing. Crash landing, we'll say, okay. Charles, yeah, it's a great philosophy. I would encourage you to learn more. Thank you, Kevin, for your opinion. Charles, thank you. Can you buy calls on TLT? I'm personally adding, but I think you have to go into November, December, or ideally actually, March, April. So I am buying TLT calls, but I'm going out into November, December. So November, December, January. Short term, it looks like it's pulling back. Right, it's correlated to yield. Yield continue to rise. I don't think we're going to break 3.5%, right? I think realistically we can get to 3.2%. But again, the initial reaction, to the Fed in September could be higher yield because, most likely scenario, what's going to happen in my core scenario. My core scenario is that Fed will come out in September and nothing's going to change. They're not going to pivot. They're basically going to say what we already heard. In October, they're going to meet and say the same thing. Then the interest rates realistically will go lower. Rates will continue going higher. I think this level is set, right? Because we broke through this 2.7, but something like this potentially can happen. And then only next year will it continue to pull lower. All right, any other questions? All right, so how do you trade in current market conditions? Again, my favorite strategy is to sell out of the money premium. So let's go over some of the trades. AMAT, right? It's the same strategy, and this is the most common and the most favorite strategy for most traders in the bear market, right? It's selling out of the money premium. Everybody does a little bit differently, right? It's time, right? The expiration time and the range, right? So you basically look at the chart, right? You look at the options data, you look at the implied volatility, which we do during live trading room, and we basically say, by this Friday or by September or by October, by November, where do I think the market is going to trade, right? This exercise we did today, right? If you said, listen, market is not going to break 390, like I said, right? It's not going to break 440, right? Then the right strategy is to sell 460, 440 call spread. You sell 460, 440 call spread right away. Some people would say, well, and I don't think it's going to break 390, and you sell 390, 370 put spread. So you sell put spread and you sell call spread iron condor, because you believe by October it will not breach these levels. It's going to trade in some kind of a range. And you can look at the options data and it will tell you what the probability, right? By selecting 30% profit, you know, it will give you that probability that 30%, you know, 70% time it will not get to 460, right, by the expiration date. Oh, on expiration they will not expire at these levels, right? 450, 460. Or you sell call spread because it's overbought, and then you wait, and maybe if it reaches 410, right? Maybe if it reaches 410 next week, okay, then you sell put spread. Right? But that's the most, and the options data can tell you that, right? You can do it for next week, right? You can look at the next week expiration, or you can look at the Friday's expiration, right? Because earnings by definition gives you extra volatility. This is a very popular strategy. Basically, aim at announcing earnings, right? You look at estimated implied volatility move, and you're saying, I don't think AMAT will break 105 level, you know, 2 times estimated move, and I don't think it's going to go above 117 level, right? And based on that, you're selling the premium. So I sold 118 call, and I sold 105 put, collected roughly 40 cents. On a $100 stock, it's 40 basis points, right? So I collected 40 basis points. And that's my strategy. Usually the argument is not the argument, but the discussion becomes, well, 40 basis points, right? You did one contract, right? You made, let's say, $40, right? It expired worthless, $40, or, you know, you paid, you know, some hedges. So you made $34. You know, what's $40, right? It's not going to break or make my day, right? Right. But then the question becomes, how often do you do this trade, right? Let's say you do this trade 4 times a week, right? You only do 4 trades a week, right? Or you do 4 trades a month, same calculus. If you know, here I'm waiting for a week, you know, if you're waiting for 2 weeks or 3 weeks, then, you know, you look for 1 or 2% gain. But the math stays the same, right? The idea of compounding investing. So compounding investment, right? Compounding investment, and then basically, let's say the winning rate has been 75%. So you have 3 winning trades, right? Each, let's say, 0.5%. And you limit your loss to also 0.5%. So if you have 3 winning trades and 1 losing trade, then you made 1% a week, right? So in 1 week, you make 1%. I mean, there's earnings almost every day, you know. And then in 1 month, you're making, right, you multiplied it by 4%. And then in 1 year, you multiply by 12, you have 48%, right? So if you can make 48% in the bear market, you're a superstar, right? You're like the best money manager there is, right? So let's say this was 1% loss, right? And you only made 0.5%. Okay, so you made 24% a year. If you want to make more, you don't trade more contracts, right? You don't take more risk, you just trade more often. Same position size, always the same trade size. And you might, I'm looking for 0.5%, you can look for 1%. And then we went over some of the hedges like we did with Cisco trade, right? Cisco trade went against me. I actually only made 1 cent on that 50 call, but I was able to close the stock and make 1%, right? So overall, I got, the profit was close to 1%. But the point remains is that you keep the same trade size, you don't increase the trade size, you just trade more often. You don't have more concurrent positions, but you just trade more often. Instead of 1 trade a day, maybe you do 2 trades a day, right? Instead of looking for 0.5%, maybe you want to take a little bit more risk than I do, and you look for 1% gain, right? Instead of selling 18 cents, maybe you want to sell 30 cents. There's no wrong or right, but as long as you're consistent and you're process oriented and you always trade the same size, then the process repeat. I was going over yesterday, if you guys didn't see it, EOS implementation, right? So I'm part of this EO organization. They implemented EOS system to run your business, right? The idea is for you to run the business, you have to have the following components, right? You have to have a vision that's shared by all of your employees, right? If you're closing your eyes and you think you're rowing north and all your employees are rowing south, that's a problem, right? So you have to have a vision of where the company is heading and how it's gonna arrive there, right? So vision is extremely important. You have to have a data, you have to have a scorecard, specific measurables. You have to have a process, right? Documented process followed by all. If you go on vacation, any of your employees should pick up a manual and follow exactly your steps. You have to have the right people in the right seat, right? You have to follow leaders that have good in operations. Somebody can be good in marketing, they have to have the right skills, right? They have to be very innovative, right? They have to be very artistic, right? Very creative. So they have to be in the right seat, right? The marketing people. Operations will have totally different skill set, right? They're process oriented. They are very operationalized. The process is their, Bible. I mean, you have to have issues and be able to solve them, right? And then finally, it all comes together as attraction, right? When all of these things come together, you have attraction, you have a will, and you can move forward, right? Trading is no different, right? You have to have a vision, how you're gonna make whatever your annual goals are, 10, 20%, right? You sign up for Tradespoon, you follow their trades, and then you make money. Is vision enough? No, vision and Tradespoon, it's only one component of this wheel, right? Let's assume Tradespoon is the best newsletter out there. Let's make that assumption, which is most likely not true, but let's make that assumption. Is it enough for you to make a lot of money, which most people actually assume? The answer is no, right? If you don't have data scorecard, what is the data scorecard? Is the goals, right? In trading, goals, realistic goals, right? If I'm looking for 0.5% profit on the trade, on short-term trade, and you're looking for 5% profit on the short-term trade, it doesn't matter how many signals I'm going to provide. We're not rowing in the same direction, right? You're rowing in one direction, and I'm rowing in totally different direction. So you have to have reasonable goals. They have to be reasonable, they have to be simple, and they will be easily measurable, right? KPIs. In the business world, talk about key performance indicators, right? Key performance indicators, how many trades you make sure you never lose more than 2.5%. Your weekly goal is you look for 1% gain every week or 2% gain every week. But it's a simply defined goals, and you have KPIs. Process. You have to have a trading plan, right? It has to be written down. It has to be able, if you go on vacation and you give me your plan, I should be able to execute exactly what you're doing day by day, right? Without, under questioning the process. So you have to have a written trading plan. You have to follow it, right? You have to have a journal, right? I encourage you to have a journal. And I encourage you to grade yourself, right? Because again, for the wheel to move forward, you have to have a process, and you cannot break process, right, to achieve the goals, right? The biggest mistake in trading, you follow your goals are more important to you than vision, right? It's more important than what I tell you. It's more important, or whoever you're following, right? Your goals trumps everything. This is the most common mistake. It's just one component of the wheel, and you will not move forward. So you have to have a vision, you have to have a faith and belief, you have to have goals, and you have to have a process. And you cannot undermine process to achieve the goals, right? If you're letting your stop loss going too far, okay, you might get away with it one time, you might get away with it a couple of weeks, couple months. Eventually, you will condition yourself, and you will not get away with those mistakes. So you need to have goals, you need to have process, right? You have to have the right people, right? You're following Tradespoon. By the way, if you're looking for this process, right people at the right time, YouTube, right? Please sign up for YouTube. This is where, going back to vision and faith, I will provide you daily commentary, daily videos explaining, my support, what I think, where the market is heading, right? If you're not sure, soft landing, hard landing, are we going up or down? Every day I will tell you what I think, what are the key support and resistance levels. Also on Wednesday, without any financial commitment, you can actually participate in live trading room, right? Going back to this Stoic philosophy, I mean, you can read these books until you turn, blue, but unless you follow them, unless you follow Stoic philosophy, you're not going to change your mindset, right? The idea of Stoic philosophy is that, you're minimizing emotions, right? Their idea of, if there is a event, right? If there is an event, and we spoke about this quite often, right? In trading, it's very important. There's some kind of event, right? And then there is some kind of response, right? Somebody cuts you off on the highway. What's your first response? You say something that you will regret, or you show something that you will regret in the future. In between, there is a space, right? They call it judgment. No, misspelled judgment, or, in trading, the same thing. You see something in the market, right away you react. There is a space and time where you want to analyze, right? And then there is different ways to kind of find the space between your event and reaction, analyze, and kind of decide, is this the best response? If somebody cuts me off, what is my best response? Talk about empathy, right? They're saying, well, maybe this guy, his wife is, delivering a baby and they're going to a hospital. You don't know why he cut you off, right? Same thing with trading. Market, first reaction, market is down, right? You assume market is going to continue down, you sell everything. Well, pause for a second, open up your journal and document your thoughts. Is it enough for one day to set the new trend? Just because high yield broke or dollar continues going higher, how long will it go higher? And try to look for that truth, right? Seek the truth. So in trading, this is extremely important, this space in time. And this is going back to be self-awareness, right? Emotional intelligence. Zeno knew about emotional intelligence 2,000 years ago, right? 2,000 years ago, he didn't know the term emotional intelligence, but he was maybe one of the founding members of emotional intelligence and self-awareness, right? So that's very important. All right. Any other questions? So please follow us on YouTube, and I am part of the gate.org. I'm going to put that link here. I'm on the board of directors. This is a way to directly donate to Ukrainian families. There are millions of families displaced. The war continues on. It's probably not going to be over anytime soon. And meanwhile, there are millions of children that are suffering. I was born in Ukraine. I have family in there. So this is the site where you can directly choose family, and they will send you these nice cards and say thank you. So I encourage you to consider donating. What else? In terms of Tradespoon, I can give you vision, right? And I can give you process, right? KPIs, we're all going to have different KPIs. I look for 0.5%, you look for 1%. I have 4 positions, you have 6 positions. I risk 2.5%, you risk 1.5%. We have our own KPI, right? It all depends on how risk averse you are and where you are in the journey. But we can share the same vision. Definitely can give you a process, right? You can participate in closing bell, you can participate in morning bell, you can get SMS alerts every time I trade. There's always explanation, right, in the video, detailed explanation of every single position, why I'm in this position. So I can help you solve any issues, right? Charting, where a dollar is going, all that information. But you need, you are responsible for following the process, right, and not deviating for the process. You are responsible for setting up attainable, simply defined, and simply measured goals. All right, that's all I have for today. Thank you very much, and have a great day. Faust, thank you. Charles, thank you. Genevieve, thank you. Thank you for sharing. It's great that you're housing Ukrainian family. It's awesome. Thank you for the movie, Mr. Jones. I'll look at it. Charles, have a great weekend. Faye, have a good weekend. Everybody have a great weekend. Thank you very much.